Hi all, and welcome to the fourth episode of the X podcast, Bitcoin as a store of value. Waiting for Jesse Myers, Croesus to join. I see now. So, hi Jesse, I will invite you to speak, and Francesco should join us soon. Francesco is connecting.
Hello, everyone. Hello, Alessandro. Hello, Jesse. Nice to meet you. Sorry, I was a bit late.
Hello, everyone. Can you guys hear me?
Yes, now we can hear you. Yes,
All
I
right,
can hear
great.
you. Hi Jesse, nice to speak with you. I think first time
Yeah.
we spoke directly.
Yeah.
Hi Francesco. Yes, please.
No, go ahead.
I want to say also hello to Francesco. I read many of your articles. Also, I'm listening weekly to your on-ramp podcast. So great to have you. I think you're among one of the most experts on Bitcoin overall, macro, what's going on, Bitcoin as a not only technology, halving. So great to have you here, and for sure we will have a great conversation.
That's too kind. And yeah, I look forward to this conversation. I'm going to retweet it right now, too, so to make sure it's out there.
Yeah, Jesse, I'm honored to talk to you because you are responsible for a sizable portion of my stack, thanks to your article. So, and when you were anonymous, I like to imagine I don't know what kind of entity or superpower, so it was amazing. Really, thank you for your work. I strive to have you here. I wanted pushed Alessandro to just invite you because you really gave considerable knowledge to this space.
Thank you, guys. That's too kind. Yeah, but you got as you guys know, I'm excited about Bitcoin as an asset. I'm excited about the mechanics. I'm excited about the halving, and I've tried to put into words, into writing, what I see, and in the hopes that other people, it helps it make it more clear to other people, and so Twitter Spaces is a great way to do this too. So I'm looking forward to this.
Yes, and we will also we are recording also the X Spaces. It will be also in YouTube, so many other people will have the chance to listen to the recording later. But I think we want to also have in X Space because we want to give also the offering of the experience to hear you live. I think it's a bit different if someone is listening to a podcast or knowing that you are now speaking live and they can listen to you or to any other interview. So I think it's great way to proceed.
Awesome.
Looking at your article, and I think we can have. For me, I individuated 4 great points to discuss today. First, it's the first interview after the halving, and you wrote it extensively, so we cannot not start with the important and impact of the halving.
Mm-hmm.
Second will be 2024 outlook and ETF implication. I heard you also in podcast recognizing the ETF that also went above your expectation.
Yeah.
Third, we cannot miss this Bitcoin potential. I was last year in Prague, and Michael Saylor used your chart for this 900 trillion wealth worldwide, and you updated also recently. So it would be great also if the listeners hear from you what do you think will be the Bitcoin potential. And the fourth thing will be that also for me, I think the same. You wrote also you studied MBA at Stanford, and generally we tend to think, okay, people who do or MBA or PhD, they are the smartest, so they should be the first to get it. But most of them, they are not getting Bitcoin. I studied engineering. I did an MBA as well, and I see also with some of my colleagues or friends or contacts, some are interested, but many are not still interested, and are really understanding. Barely no one is understanding. So I think we can deep dive also on this. What do you think?
Yeah, those are 4 awesome topics. Let's do it.
Okay, so we can start discussing about the halving. If you can summarize what for you is will be the impact of the importance and the impact of the halving. You also wrote why we will see the impact, for example, on price and Bitcoin adoption, not the day after the halving, and but 6 or 12 months after.
Yeah, that's right. So yeah, we can start there. That there's a misconception just in the general public, or when people first hear about the halving, they get excited because they think like, oh well, if this happens right then there's going to be a price pump immediately, and so people get excited and they speculate, and then the halving comes and it nothing ever happens right away, and people are always surprised by that, but it shouldn't be a surprise because that's if you dig into the mechanics underneath the surface, that's what you should expect, and we'll get into that in a second here. But I guess the next thing to touch on is that for me, I think the halving is the secret sauce for Bitcoin. It's what makes this an exciting asset. It's why we're all here, frankly, whether or not we realize it or not. Um, Non-sovereign, different digital money is exciting, but Bitcoin is a special asset because of the halving. And what the halving creates is that Bitcoin is ultimately a savings technology, which is a phrase from Pierre Rochard that I think summarizes how people should view Bitcoin and interact with Bitcoin better than any other phrase. It's a savings technology. And what that means is that if you store your purchasing power in Bitcoin today, it will grow in purchasing power over time. And there's never been any asset like that, because no asset has had the properties of increasing scarcity. And increasing scarcity is what the halvings cause, because the amount of Bitcoin being created every year a year ago is different, was twice as much as the amount of Bitcoin being created now for the next year. So that we went from a less scarce world for Bitcoin to a more scarce world. Bitcoin is harder to come by now. It's harder to get your hands on Bitcoin. If you're coming into the market, if you're bringing dollars in and you're trying to buy Bitcoin, there's less of it to buy because there's less of it that's being created and brought to market. And of course, the what you end up buying is the circulating supply that already exists. But to cause holders to part with their coins, you have to bid for that and eventually bid up the price to a point where existing holders are willing to part with their coins. So the halvings are this special property that no other asset has ever had before, because it's never been possible to have increasing scarcity, pre-programmed increasing scarcity that's deterministic with in the physical realm, because nobody controls supply in the physical realm. That's with any asset. That's true of commodities, like gold is the hardest to come by physical commodity, and that's why it's the most valuable store of value asset in the physical commodity realm. But we find more gold every year. We find 1.5 to 2% more gold every year just from gold mining, and it doesn't even touch the futuristic potential to create more supply or access more supply in asteroids, or even from filtering out gold in seawater. There's many trillions of dollars of gold in seawater that has been inaccessible, but all it would take is some sort of genetic engineering breakthrough to cause mollusks to filter out gold from seawater, and then boom, you've created a whole new way to to radically increase the amount of new supply of gold. Anyway, so that's the physical realm. It's just not possible. The physical realm is about atoms. But in the digital realm, you can have programmed scarcity, and that's the core breakthrough of Bitcoin, is the invention of digital scarcity. And what's so brilliant about that invention is that Satoshi not only invented digital scarcity, but also figured out a system for increasing scarcity over time, which then creates the core reason for holding Bitcoin, is because you're ultimately speculating that if I hold Bitcoin, it will grow in purchasing power as it gets more scarce. And so I should hold Bitcoin as a savings vehicle into the future in order to capitalize on those properties. And that ultimately is what we're all doing. We're all interested in Bitcoin because we believe that it will appreciate in purchasing power. So it's a savings technology for us and will grow our wealth. And that's all due to the halving. So that's why the halving is a huge deal. I guess we could also dig into the mechanics if you guys want to, talk about why it's no surprise that the halving hasn't immediately caused a price pump.
I would say yes, also because it was 4 days ago. It's not only that you are an expert on the halving, but it happens 4 years ago. Francesco, what do you think? I think we can spend
definitely. This space is meant to be also very educational. So you have to, for the other newbies and listeners who approach to Bitcoin. So please explain.
Yeah. Okay. So I think one of the misconceptions in the Bitcoin space, like among Bitcoiners, is that the halving at this point doesn't matter because it's such a small thing relative to the total circulating supply. And I get that perspective, and there's some truth to it when we get deep into a bull market, I think. But for now, what matters is, and I think people should focus on, is flows. So what's the flow of money, of value, from the Bitcoin supply side, so newly mined Bitcoin, but also the flow of dollars or other currency into Bitcoin, and what does that look like? So everyone knows that when supply and demand meet, you establish your price, right? So that your supply curve and your demand curve cross, and where they meet is where price is established. That's your supply demand price equilibrium. And Bitcoin establishes that over the course of its over the 4-year cycle. So where we were at for the last year has been a place of relative stability for Bitcoin. The price has been running up because of ETFs recently, but if you take that noise out in particular, it would look like a pretty flat chart overall. And what that means is that the amount of Bitcoin being created every year, every month, really, is equal in value to the amount of net dollars flowing into Bitcoin every month. And what that means is, supply and demand have found equilibrium, where the amount of capital out there that is trying to come into Bitcoin, whether that's from existing Bitcoiners adding to their stack or new Bitcoiners deciding it's time to go from 0 to 1, 2, 3, 4, 5% allocation. All of that activity, and also all of the outflows from Bitcoin, so holders selling their Bitcoin, that all nets out any given day, month, year to like a net inflow or net outflow of dollars from to or from Bitcoin. And for the price to go sideways, you have to find a price level where the amount of supply being created every month is equal, more or less, but all else equal, noise removed, it's equal to the amount of dollars or other currencies flowing into Bitcoin. So we achieved that in the year-ish before the halving, but then the halving comes along. And what it does is it cuts in half the amount of supply being created every month, but it doesn't change the amount of net inflowing demand. So the numbers for where we've been at, based on the current price going into the halving, was we were creating $1.8 billion of Bitcoin every month. And, price was more or less going sideways for the last month in particular. And so all else equal, there was $1.8 billion of net inflowing demand. But then the halving happens, and that $1.8 billion of supply, newly created supply every month, drops to $900 million of newly created supply every month. But ostensibly, that demand figure doesn't drop. It remains the same because there's no mechanic cutting it in half. If anything, you could argue that it increases because people are speculating that the halving will cause a bull market. But all else equal, you still have $1.8 billion of demand. That means there's a delta, there's a gap, there's a hole of $900 million every month of supply that used to be created to go meet demand, but is now no longer being created. And so, but that demand is still there. And so that demand goes to the only place it can go, which is existing holders. And so it's pulling coins off of exchanges. So there's that net inflowing capital is pulling coins off of exchanges, buying from existing holders, and in doing so, chipping away month after month after month, $900 million a month, at the amount of Bitcoin that holders are willing to sell around these price levels. And so obviously that effect is cumulative. It builds up over time. That $900 million deficit every month adds up until you've chewed through all the supply that people are willing to sell around these price levels, and there's nothing left. And the only way to resolve that is for that incoming demand to bid up the price that they're willing to pay in order to find supply. And that's the process of the halving after a few months, maybe it's 3, maybe it's 6 months, starting to really add up in terms of the price starting to drift up. And then that sets in motion a whole flywheel of positive effects where the price starts to drift up. People start to see, oh, Bitcoin's been going up. I want to be a part of that. I want to own more Bitcoin. Maybe I'm less interested in selling now. And now you have a greater imbalance of demand versus supply creation or willing sellers. And that keeps flywheeling into what is truly a bubble. And that's what we've seen in the 12 to 18 months post halving, after, in 2020, 2016, 12, 18 months later, we had full-blown bubble mania. And obviously that's unsustainable, and on the back end of that turns into a crash. But in that crash, the impact of the halving, the mechanics of the halving are not undone. So you don't go back to a world where Bitcoin is less scarce. You remain in this, in this completely inelastic supply, constrained world where you still have less supply being made. And as a result of that, you establish a price floor. The bubble resolves itself at a price higher than it was before the halving occurred. So, and then you're stringing together halving after halving every 4 years, where that net flows, like a mechanic of suddenly having, upending the supply demand price equilibrium every time the halving comes along, and then the inevitable bubble that forms after that, settling at a higher low on the back end, and of course having higher highs each bubble along the way. So what you end up with is a series of bubbles going up and to the right as Bitcoin becomes a more scarce asset, therefore a better store of value asset, and continues to ingest more of the world's capital.
I see.
Yeah, Francesco, please go ahead.
Yes, I want to ask you if this mechanism matches with the concept of fair value Bitcoin, meaning that assuming that the cost of production makes the price. So if the cost of production doubles up, then the fair value of Bitcoin is going to be higher. So does this mechanism also pinpoint the concept of fair value of Bitcoin as an asset?
Yeah, that's a great question, and I do waffle on that. I guess I tend to view it as like something like a tripod, where Bitcoin is bootstrapping its value through a combination of effects. And one of those legs to the tripod is this idea of like the cost of production. So, that's part of it. And obviously, as we're producing less Bitcoin, the cost of production goes up. And also as the price of Bitcoin rises and it becomes economically attractive to mine Bitcoin, more hash rates added, and then overall, the cost of production for each incremental Bitcoin ratchets up in a stepwise fashion. So I think that's a core part of it. You can take the opposite view too and say that it's the value of Bitcoin is what people perceive the value of Bitcoin as, right? And what they're willing, and therefore what they're willing to pay to acquire Bitcoin. And I think that's a fair point too, because obviously you need the collective societal perception of Bitcoin as something worth that has value in order to allow this continuing march upwards in overall price. And so I think that, I think they feed off of each other, that and probably a couple other effects that help together ratchet up the store of value perception and reality of Bitcoin as an attractive, valuable asset. And then that is, eventually reflected in the market price of Bitcoin.
Yeah, absolutely. And if we just think that in nature we don't have a finite asset, and then when the price of gold goes up, then also more, as you also wrote in your thread, gold miners are incentivized to increase the supply. So
Yeah.
Even if it's was discovered by Satoshi Nakamoto, but it still as an asset comes from math. So we can say that it's still a natural asset which has been discovered to be finite, because by combination and equation, basically, it gives a result which delivers to the mankind a finite asset. So I just wanted to point out how something which is a discovery as Bitcoin is, and as you described the process to deliver scarcity, it actually comes from nature, because like the co-founder of Apple said, mathematics is nature and Bitcoin is part of it.
Yeah, that's right. Ultimately, Bitcoin is all about trusting in math and shifting what we perceive as valuable from a not scarce physical world into a absolute scarcity digital realm based on math and protected by math too. That's the beauty of cryptography. And so it's all about math. And I think to understand Bitcoin at this early stage, like if you're listening to this right now, you probably have a pretty good conceptual grasp of math, or at least the concept of scarcity and increasing scarcity and what that does to people. And so, I think that's a rare trait, frankly, in the world. And so if, those people find Bitcoin at this stage, and the rest of the world is going to find Bitcoin at a later stage when that math has played out and has imposed its reality on the world, such that they can no longer ignore it.
Totally. Thanks. I agree 100%. I think also on this, on educating people, for every Bitcoiner, once you understand Bitcoin, you want to proactively share with anyone you know, because you say, okay, that's a great thing. But then you realize that for many, you have a pushback, especially if the price is low. So I think now also Stefan Livera wrote, one Bitcoiner, it should not be so much proactively explaining or forcing people to be into Bitcoin, but it should be known that he's a Bitcoiner. And then it will be the student should ask. When the student asks, the teacher should be ready to explain. I think that's also a great explanation what we should do. It's not people now, if they are against now, probably they will get Bitcoin in 6 months or in 12 months or in 2 years when the price likely will be higher.
Yeah, agreed.
Thanks for the explanation on the halving. It was really great and well explanatory, and also make me reflect. In the last 2 weeks, I saw several screenshots of Bitcoiners sharing messages from friends. Many they were thinking that the Bitcoin supply will be cut in half. Another was saying, but why are you buying Bitcoin now if the price is being cut by, it will be cut by a half by the halving? Like, I'm the only one intelligent here. So you really see that the overall education on Bitcoin, it's quite low. We are in echo chamber. I see many great statements, but because I'm following Bitcoiners. So, but if you go out there, it's completely different.
Yeah.
And another observation I had, when I explain scarcity, people say, okay, actually, as you said, without the halving, there will not be Bitcoin. Actually, it's the first time that money in the digital world exists. Also, Der Gigi wrote in Bitcoin is an idea. They tried Alfine, and there were already 6-7 tentatives. So one of the problems is stopping, not having scarcity, because with the technology increasing, they were producing more money, and this would not be good money. But Satoshi Nakamoto invented the difficulty adjustment and make the whole system work. But
Yep.
once you explain, once I explain, okay, but then it will be less and less Bitcoin, so it will be more valuable. Many they react, okay, but if there will not more Bitcoin, then we will run out of Bitcoin, and there will not be Bitcoin for everyone. And this also is another misconception. What would you say on this to explain why is economically is not correct?
Yeah, it's a great point. Yeah, the first thing that pops into mind is the pizza analogy, right? Of well, I guess that's for the infinitesimal, divisibility. But okay, so a better angle would be to talk about the gold standard, and basically in the U.S. And for much of the world, we had a gold standard that was pretty solid. It was pretty unpolluted with politics and messing with the mechanics at all. Between the American Revolution and the advent of central banking in 1913, so about 150 years, we had a gold standard where the price of things didn't really fluctuate like at all. And the result of that was a tremendous period of technological advancement. Capital expenditures, capex into new technologies, developing modern manufacturing, railroads, the automobile, everything. It's just an incredible explosion of prosperity that obviously came with some trouble as well, whether that's robber barons or like child labor or eventually a world war. But the reality of it is an incredible explosion of prosperity from having a gold standard where you could invest your capital to produce more capital and then the important part is not have that capital be debased or diluted from money printing, because the amount of gold above ground is being diluted at a small percentage every year and on the gold standard, and that allowed prices to remain pretty constant. Obviously, in the fiat era, we add much more as a percentage per year to the existing monetary supply, and that causes the debasement, dilution of wealth. And so Bitcoin takes the advantages of that gold standard era and amplifies them, where you not only have that 1.5% or roughly per year of supply inflation that you had with gold and have had with gold for hundreds of years every year. You not only have that, but you have that increasing scarcity where that percentage drops down to zero. And in fact, the important part about the most recent halving that I think everyone should be excited about is that we just now, in the last week, we just dropped from an overall supply inflation rate that was above gold. It was like 1.8% per year in Bitcoin, to now 0.8, 0.9% per year in supply growth for Bitcoin, whereas gold remains, that 1.5% level. So in that sense, Bitcoin in the last week just became a better store of value than gold. And for context, gold is a $16 trillion asset class, and Bitcoin right now is a $1 trillion asset class. And yet Bitcoin is the better store of value as of a week ago. I think obviously gold has been around a long time, and it's valued by the whole world. Everyone places value on gold, and only a small portion of the world has yet dug into Bitcoin enough to value Bitcoin. And so I think the price difference between these two assets is really just reflective of the world still needs to learn about Bitcoin. And luckily, Bitcoin will force them to learn about Bitcoin as the halvings keep rolling along and the post-halving bull markets keep precipitating. But all that to say that we're in a world now where Bitcoin is a better store of value asset, yet 1/16 the total valuation in the world, and I think that's alpha. That's having an investment edge. If you just understand the mechanics there and believe, if you have the conviction that Bitcoin is a better store of value than gold now, and that gap will close, that's an investment case for Bitcoin. Anyway, that was a bit of a detour from the approximate question of how does prosperity work on a gold standard, but a gold standard or a Bitcoin standard. And in the gold standard era, we had that 1.5% supply growth per year. In the Bitcoin standard era, we will have this increasing scarcity, so that supply growth dropping to zero, which will only amplify the deflationary effect of prosperity growth that we saw in the gold standard era.
Thanks. Yes, thanks for the explanation. I think considering you said now the global wealth, we could move exactly to this point that
Sure.
now Bitcoin has 66 or 1.3 trillion, 1.4 trillion, between 1.3 trillion market cap. And the world global wealth is 900 trillion. So, and you also make the breakdown how much we could forecast, then no one knows in the middle long term, but how much Bitcoin could take from this network. Because just before you start, as a Safedin Amos said, gold will be only the appetizer. It's firstly gold 2.0, but then it will take from bonds, from real estate, and from stocks. Yes.
Yeah, that's right. So what you're referring to is an article I put out that people can go read called Bitcoin's Full Potential Evaluation. And this is really just an exercise that I wanted to do, sort of an exercise from my prior career as a management consultant, and we would apply this skill set whenever we were trying to size the opportunity for a new business unit or a company or a new product. How big could it get? And so that was a question I asked myself about Bitcoin. It was like, how big could it get? And that led me into a whole series of questions, but the starting point there is you need to understand how big is the total global asset landscape. If you're trying to decide how big Bitcoin could become within that, you need to know how much value is out there. And I couldn't actually find a good analysis that had any like reasonable numbers and complete view of how much value exists in the world. So I spent a couple days pulling together some solid data points from various sources that I could access, and put together a view of all the asset buckets in the world to come up with, well, you add them all up, and there's $900 trillion of global asset value out there. And there could be more, there could be less, but it's somewhere around there. And I think that's a helpful starting point for assessing Bitcoin. Some of those bigger buckets are real estate. There's 330 trillion in real estate, 300 trillion in bonds / global debt, 115 trillion in global equities, 12 to 16 trillion in gold, and Bitcoin right now is just over 1 trillion. So that means that Bitcoin at this point in time is 1/1000th, roughly, of the world's value. So 0.1% of global asset value. And then the next question becomes, well, how big could it become in this global asset landscape? And then what you're doing is really assessing how attractive are each of these store value asset buckets relative to Bitcoin. And that's the key analysis that you have to go through. And when I think about it that way, and I reflect on how Bitcoin's increasing scarcity properties cause it to have like a pre-programmed purchasing power appreciation every 4 years for the next century. That, when I think about it in those terms, nothing else compares, because real estate isn't getting more scarce, bonds aren't getting more scarce, equities aren't getting more scarce, and in fact, equities and real estate are perhaps more overvalued than they've been in decades, if not centuries, in terms of price to earnings ratios for equities in particular. And here's Bitcoin. This is tiny $1 trillion little thimble in this global ocean of value, and it has more attractive properties as a store of value asset than any of the other big buckets. So then I think that there's a portion of capital stored in all of these big buckets, that each of these big buckets that will, as that capital learns about Bitcoin and understands the properties therein, that capital will be induced to switch from to sell the asset that it's parked in, and then purchase Bitcoin to move from, let's say, bonds, which in my opinion is probably the lowest hanging fruit, because bonds in our debt-based monetary system where we've reached exceedingly high debt to GDP ratios, those bonds will have to be debased. They will have to lose in real terms as they are inflated away by governments printing more money than the yield on those bonds, because that's the only way you get out from under a large debt burden, a large debt to GDP burden, is you have to print your way out, and that'll come at the direct expense of those bondholders. So if you're holding bonds, I think over the next decade, maybe 2 decades, you're looking at a negative real return. Whereas Bitcoin has this increasing scarcity mechanic that if you dig into it deep enough, you start to get really confident that it will grow in purchasing power every 4 years because of those mechanics. So now you're talking about $300 trillion of value parked in an asset class that will deliver negative real returns over the coming decade, versus this tiny little bucket that will deliver positive real returns and quite large real returns because of the increasing scarcity function built into it. And I think that a good portion of that capital, as it becomes aware of this opportunity, will flow from bonds and into Bitcoin. But that'll also be true across all these other buckets. There's some amount of real estate where people who are landlords and hold properties and have to deal with all the headaches of owning real estate just to get their yield could decide, you know what, it's a lot easier and maybe even more attractive to hold Bitcoin. And so I'm going to sell some of my investment properties and buy Bitcoin with those funds. I think we're going to see that's the process that Bitcoin has set in motion, and its pre-programmed supply schedule will cause that to continue playing out over the coming decades until it has ingested a good portion of the world's capital. And that's where it's kind of up to anyone's guess about, what's the full potential valuation for Bitcoin. But it's certainly not 1 trillion. It's certainly way higher than that, especially if gold is a $12 to $16 trillion asset. And as of this week, we are now a better store of value asset than gold. I think $12 to $16 trillion is a layup. And you could see as much as, in my opinion, I think a conservative estimate, actually, if you look at each of these buckets, adds up to $200 trillion of value eventually in today's dollars, eventually flowing into Bitcoin from the existing store of value buckets, which would mean $10 million per Bitcoin in today's terms. So that's the result of that exercise. And I encourage anybody to read through it to understand the logic there. You can find that at Once in a Species, Bitcoin's full potential valuation, and then, and more importantly, run the numbers yourself. So after taking in the starting point of how much value is in these different store of value buckets, decide for yourself what percentage of each of those store of value buckets you think might be interested in shifting from their existing bucket into Bitcoin instead.
Thanks for the explanation. I also pinned your website Once in a Species, so the full potential is one of the articles. I also important, maybe not only the number. So 900 is very important to at least a person knows how much wealth is in the world. For example, you are saying 200 million. Greg Foss, when I was in my first Bitcoin conference in Amsterdam, 2022, he said about 5% of global wealth, so 45 million. It will be 2 million per Bitcoin. Other people can say 60 or 80 trillion, but I think important is the direction and the magnitude.
That's right.
I'm also saying to my friends that from now, so I can clearly see the path of Bitcoin from now till 1 or 2 million, sorry, per price. From 60K to 1 or 2 million it takes some from bonds, some from gold, some from real estate. So it's also now the best moment if you want to be in Bitcoin. Like now from 66 to 2 million, it will be like 30x, something like this. Then from 2 million to 10 million, it's a 5x, but it's much higher and much bigger appreciation. So it also, the timing is also one, people entering the Bitcoin is important. We are still very early, but at the moment we are also probably it's the best. I consider also the best time in considering risk reward, also because we have now the legitimization from Wall Street, and the risk is much lower, and the opportunity is still high.
Yeah, I guess you could say it's the best time to invest in Bitcoin was 4 years ago, and the second best time is now.
Yes, totally. Or even or 10 years ago. But I think also,
Right.
But 10 years ago, people are saying also many years ago, but firstly, many years ago, there was much less material. And secondly, if you were, no one would have gone with 50 or 70% of the savings in Bitcoin. I think 8 years ago, it was mostly for cyberpunker or software development engineers. And secondly, if you see an appreciation of 2x or 3x, likely you would have sold. Also because the material to understand it was much less, and anyhow it was the risk was much higher. It could have failed 8 years ago. The likelihood that is failing now, it's much lower, definitely.
Agreed.
Is your study about the adjusted scarcity according to the number of users you made in 2020 still holding up? You stated roughly 10% increase in adjusted scarcity, although you said it's not precise, but after all of these years, if that's the rate, it can vary, but maybe not too much. We can have an indication for the future.
Yeah, good question, and a deep cut. That's like the first bit of Bitcoin analysis I put out back in 2020. The adoption adjusted scarcity analysis. My thinking back then was that I was trying to poke holes in the stock to flow model, and one of the ways I tried to do that was by thinking through, okay, we're going through an adoption curve, so the bell curve of technology adopters. First of all, where are we in that process? And that's where the on-chain numbers are very helpful. Back then, well, right now, there are 4 million addresses with 0.1 Bitcoin or more in them. And so that means there's at most 4 million people on the planet who have taken self-custody of $7,000 of Bitcoin savings. And back then, that threshold of 0.1 Bitcoin was like, like $1,000 or maybe $2,000, but now it has grown such that is $7,000. The number also back then, 4 years ago, it was 3 million addresses that had 0.1 Bitcoin or more in them, and now it's 4 million. So we're actually seeing a distribution of Bitcoin savings to a greater number of holders, which is great. But yeah, the thing there is that the value of that 0.1 threshold has grown quite substantially. So it makes it a little bit harder to make the analysis clean. But anyway, the idea there was there's 4 million addresses with significant Bitcoin savings, and that's in a world with 8 billion people in it. So at most there is 0.05% of the world have saved 0.1 Bitcoin in an address they control, and that's wild because we often talk about how Bitcoin is hitting the mainstream now. It's becoming a mainstream asset, and there's some truth to that, but at the end of the day, there's not that many people who have understood Bitcoin deeply enough to take self-custody of a significant amount of Bitcoin, 0.1 Bitcoin. So we're really early in that adoption curve, very much in the early stages of the innovator phase. And so when people say that we're hitting the mainstream right now, they're wrong on when you look at it that way. Granted, what I'm not really addressing here is how the ETFs allow access to the mainstream, and a ton of people are probably getting some exposure to Bitcoin through ETFs or leaving their coins on Coinbase or something like that. But in my mind, that doesn't really constitute true adoption of Bitcoin as a savings technology, meaning that those people haven't fully understood Bitcoin if they're leaving it in an ETF or if they're leaving their coins on Coinbase. So actual adoption is still extremely early. And what I wanted to do with that analysis was then project forward, okay, what would it look like as we move through the bell curve of adopters, and each incremental slice as you go through the first half of the bell curve increases, right? That you're going up that bell curve. And that means more and more people are coming in with each increment of time, really. And how does that line up with the increasing scarcity function built into Bitcoin supply issuance schedule? Well, depending on how quickly you assume we move through that bell curve, each 4-year increment could be, I think in that analysis, I made each 4-year increment, each halving era, a standard deviation as we marched through the bell curve. And I think that's the part of that analysis that hasn't held up, is we're moving more slowly than that, which just means it's that much earlier than it otherwise would be if we were moving more quickly through the bell curve of adoption. But anyway, the result of that analysis was that if you combine the 2x increase in scarcity every 4 years with the exponential growth in the size of each incremental slice of adopters as you move through the bell curve, that amounted to a more or less 10x of an increase of adoption adjusted scarcity every 4 years. And I don't think we've seen that actually, because we're not going through a full standard deviation every 4 years as I thought we might. I think we're seeing less than that. We're probably seeing something like a 5x, based on the price appreciation over the last 4 years in particular. But that's still great. And if we still are that early in the bell curve of adoption, and this adoption adjusted scarcity continues to play out, amplifying the increased scarcity from each halving by the amount of new people who are competing for Bitcoin among the existing base of Bitcoiners, and then the new cohort coming in, and everybody's competing for newly issued Bitcoin or trying to buy it off of existing holders. That could be a 5x every 4 years in terms of the amount of adoption adjusted scarcity, and that directly drives the price. So I think that analysis still holds. It probably needs to be updated to where we're at and what we've seen over the last 4 years to kind of move more slowly through the bell curve of adoption. But yeah, I think that ends up still being my North Star about what's going on with Bitcoin, is we're very early in the adoption curve of people understanding that this thing is a savings technology and engaging with it in that appropriate way.
Yeah, 5x is not bad at all, after all.
Yeah, right. I'll take that every 4 years for the next few decades. That would be incredible.
Good.
Yes, especially considering that every time is a 5x, the next 5x, the magnitude is higher than the one before.
Right. Exactly. And of course, maybe we have the diminishing returns, and we saw, well, actually from halving day in 2020 until halving day 5 days ago, 3 days ago, that was a 7.5x. And I think, granted, we just had a rally recently because of ETFs, But yeah, that's kind of in the ballpark of 5x. Maybe for the next 4 years we have instead of a 7.5x, we have a 4.5x, and then maybe it's 3.5x after that. But you're still crushing every other asset out there.
Yeah, I mean, also maybe the last cycle was a bit weird given the amount of rate increase, which was unprecedented, and the war and all of the macro headwinds. Maybe after all, it's not going to remain 5x. Next cycle could be different.
Yeah.
We had also FTX and BlockFi collapses that were big. Unfortunately, the crypto world impacted the Bitcoin world.
Yep.
That's great to discuss about option in these terms. I am also using or a certain amount of Bitcoin, and I think 0.1 is a fair one. Or otherwise, we can say people having 10, 15, 20% of their net worth, or let's say liquid net worth, because real estate could be a bit different. It's not easy to sell directly in Bitcoin. And I think on this, on the adoption, there is also sometimes mixed signals from the Bitcoin world as well, because I hear and see also people posting, I was in the taxi going to the airport, I orange pilled the taxi driver who now have a wallet with 50 euro or $50 in Bitcoin. And this should not be considered adoption. The same
Agreed.
as those who say, okay, I mean, Bitcoin, I have 20 euro per week or 50 euro per month. For sure they help, but we should not consider it as a Bitcoin adoption in terms of understanding. So great that we put this limit.
Yeah, I fully agree with that. And I think that's the problem, is that people cite those numbers of anybody who's ever had $5 in Coinbase, and that's not adoption. So we're actually much earlier in true adoption than people like to talk about.
Yes, and also I don't think we can really orange pill people. We can make people curious. Michael Saylor said we can not make people think, but think about. So think about economics, money, what is wrong, Bitcoin. But then they need to do the work. Everyone who understood Bitcoin, now we are discussing on this level, because we previously did the proof of work. We spent many hours, hundreds, and some they spend also thousands of hours in trying to understand this. So it's not so much for me that I orange pill someone. It's I make someone curious, and then people have to do their work. And sometimes, and unfortunately, it's kind of alone. They have to read articles, listen to podcasts, maybe going to conference later on. But it's a long path.
Yeah, that's exactly right. And but you have to do the work if you want to receive some of the disproportionate upside that's available at this early stage in Bitcoin's life. We're talking about 5x every 4 years going forward. That may diminish eventually. And you could choose to just wait until Bitcoin has become more obvious and miss out on that upside. But if you want to participate in that upside, the only way you can really do that is by putting in the work in order to develop the conviction, the understanding and conviction that allows you to hold through the volatility in order to realize that upside potential that's available right now that won't be available once Bitcoin has completed its monetization and has ingested a huge portion of the world's capital already.
I find always interesting how in Bitcoin, the laws, they can be summarized in one sentence. For example, the investment strategy will be just buy and hold after studying. And people say, but just it, I want to do something or leverage or trading or the new Bitcoin, but just with a simple, boring, that looks also stupid strategy, like easy to implement, we will likely outperform any financial advisor spending maybe 100 hours per week in the next 2 or 3 years just by buying and holding Bitcoin.
Completely
likely.
agree.
Nothing is a financial advice, and the same when we talk about the orange pilling people. at the end, everything can be summarized by everyone gets Bitcoin at the price they deserve. It sounds a
Right.
bit cynic or arrogant, but it's, after so much experience, it is what it is. If someone is not ready, then he has to wait for a higher price, and maybe we'll have a trigger in his brain, and then we'll be interested in Bitcoin at a later point.
Yeah. Yeah, it is funny that Bitcoin it's reducible to these memes that don't really make sense unless you go through all of the proof of work to understand deeply why that is the correct summary of these little bits of wisdom, like stay humble, stack sats, buy and hold. And the reality of Bitcoin, the identity of Bitcoin as an asset in your portfolio and in the global asset landscape is number go up, which is this oversimplification into a funny meme of an idea. But like that's what the mechanics point to, is that Bitcoin's number goes up over time because of all of the properties and mechanics set in motion, in an unstoppable fashion. And we are living through that, and we can choose to ride that, or we can choose to miss that, and that's up to us.
Yes, and when people ask you, I think also they ask you, one question is, when do you think, when you will sell, at which price you sell? I think the common answer that they are not getting is selling for what? For what?
Right.
For stocks, for bonds, for real estate. I think Bitcoiners likely, in case he will not be selling, but maybe let's say spending on trading. Maybe it would be for goods or services, or maybe to trade for time, so they free up some time. But absolutely not selling for any other asset. I'm telling to my contacts or my friends, asking a Bitcoiner when they sell Bitcoin for other things, for other investment vehicle, is like asking a person living in US or a person living in Europe when they are thinking to sell dollars or euro for Turkish lira or Venezuelan bolivar. It's like it is a nonsense question.
Yeah. Yeah.
Not...
And one attempt I've made to answer it is, if we are that early in the bell curve of adoption, maybe it starts to make sense. At some point, it starts to make sense to diversify into other assets as you start to slow down in the rapid growth of the monetization phase of Bitcoin and the rapid price appreciation. And that maybe that happens around the middle of the bell curve of adoption. So when half of the world's capital that might be interested in Bitcoin has already flowed into Bitcoin. But if we're currently 0.05% of the way into that bell curve of adoption, we have an awfully long way to go until we're 50% through.
Yes, and totally. For middle, at least Bitcoin should be at 1 or 2 million. Also consider the
yes.
price. Yes.
Yeah,
So
at least at that point, yeah.
At that point, maybe we will become interested in which other asset we can invest.
Yeah, I mean, and you could argue that when you're halfway through the bell curve, maybe we're at 5 million per Bitcoin, maybe we're at 10 million per Bitcoin, and it just goes much higher than my conservative estimates put it at. I think 1 million per Bitcoin is, we'll reach that when we are at parity with gold, because gold right now, is at 16 trillion. And as it continues to appreciate in this sort of BRICS era where everybody's searching for a neutral reserve currency and there's too much debt and people don't want to hold U.S. treasuries as much, gold will, I think, do well in that environment. And so when gold reaches 21 trillion, which is not that far from where it is right now, like a 30% growth, Bitcoin might match it. And maybe that's 6 years from now, maybe that's 10 years from now. Maybe it's 14, but at some point here, I think, Bitcoin will cross gold, and it might very well be at that 21 million mark which would be $1 million per Bitcoin. And matching gold is really just the beginning for what Bitcoin can be, since it is such a better asset than gold.
Talking about the store of value and adoption, people like if they sell the real estate or Bitcoin for it, they like passive income, they like yield, which is something is better not to do at the moment. But do you imagine in the future that by going into better financialization, we have ETFs, how the financial system, when is going to be conquered by this asset, going to react, is going to issue, make it possible to issue, to lend the asset and also borrow against it. And does, in light of that, does it make sense, like holding with your own keys 80% of the asset you hold, then lending out 10% or borrowing against it 10%, or maybe in different proportion? But is that possible, and to imagine such a strategy for the future?
Yeah, that's a great question. Yeah, obviously we're living through the development, the early days of a new financial system, and that starts with the base layer of Bitcoin. But obviously, there's all sorts of financial services that need to be built on Bitcoin, and lending will be one of those, and that'll look different in some ways. In some ways, it'll look just the same as how lending is done today. The difference being, lending in a Bitcoin standard has to deal with the reality that you can't print any more Bitcoin, and that's a bit of a change. And so people have to build those solutions. But financial services, people need various financial services to live their lives. We don't really even have like Bitcoin mortgages yet. Those will have to happen. General Bitcoin lending has to happen. All sorts of financial services have to be built out. And that's what the Bitcoin industry is doing right now, and it's sort of path dependent. You have to build the lower levels of infrastructure first before you can start building the more sophisticated financial services on top of that. But yeah, there will come a time, I think, where Bitcoin holders will be able to reliably, safely lend out their Bitcoin and receive a small return. But the truth of that is that will never be zero risk. There will always be some risk involved in that. So to your point, maybe it'll make sense for people to put only a small portion of their holdings towards something like that, in the hopes of generating a small yield with their Bitcoin stack. And it's too early for that, in my opinion, because we saw what happened in the last cycle with the latest efforts there. That was like BlockFi and Celsius, and they imploded. Unchained Capital, to their credit, survived because they had more rigorous lending standards. But it wasn't a pleasant experience for anybody who had a Bitcoin loan, because the volatility right now just makes it rather hostile for anyone living through that, having margin calls and whatnot. So those services will continue to be improved upon, and they will have to increasingly accommodate the realities of Bitcoin, which I don't think BlockFi and Celsius did a good job of. Unchained did a better job of, and they will, the industry will continue to iterate on that and improve. But it's too soon, in my opinion, to risk your hard-earned Bitcoin in any kind of lending platform. And when the rubble has settled, after a few more iterations of Bitcoin lending, failures have risen and then imploded, and then you start to see versions that withstand the test of time for several cycles. Then it'll be de-risked enough to maybe consider doing that stuff. Yeah.
Yeah, absolutely. Don't do it now.
I I think we are approaching now the last part of the interview, and I would like to move on the point why both. I will put the same in the same bucket, the experts and people who have a high degree of education, MBA. Many are still not only neutral about Bitcoin, but some they are still against Bitcoin. We have both people who work in economics, and also people who study economics have different job. They work in fund manager or financial advisor, and they are still against. You wrote an article on this. It would be great if you summarize the points, then we can discuss further.
Yeah, that article is why the yuppie elite dismiss Bitcoin, which you can find on Citadel 21. And yeah, that was me writing about my personal experience as I went to Stanford for my MBA, and my classmates were incredibly smart, and my friends from Stanford are very dismissive of Bitcoin, to the point of hostility about it, which is perplexing because you would think that since these are very smart people, they would see the value of Bitcoin quicker than other people, but in fact, it seems to be the opposite. And my effort to explain that was that it really comes down to trust in the system. And people who get MBAs, and certainly my classmates, have very high trust in the system. They're smart and they have a great deal of trust in the system. But people who are into Bitcoin tend to be smart and distrust the system, meaning government, central banking, the value and role of the dollar, and so on and so forth. And so that was kind of the crux of the article there, exploring why is it that these smart people, these MBAs, these yuppies, the yuppie elite, people who, in the ivory tower of our modern world, they don't seem to get Bitcoin. In fact, they reject it. And it's because they're so invested in the system. They so trust the system that they can't entertain, they can't see the value proposition of anything that is counter to the system. And so I think to get to the point where you see the value proposition of Bitcoin, you have to just distrust that, the dollar in your wallet, you have to distrust it. You have to think that this is designed to become less valuable over time. And therefore I don't really want to hold my savings in it. And that's an act of distrust, really. And it's hard for people who have invested so much of their personal and professional life into, being good soldiers, for their employers, and fighting to get good degrees, for those people to cast off everything they've invested their life into, and start to see the opposite point of view.
Yeah, it's too risky for many people, Bitcoin at this stage.
Yep.
Yeah, one thing is also, yeah, exactly. One thing, as Antonopoulos wrote in the Internet of Money, if you are an expert you are in the best position for incremental changes, but not for disruption technology. This is one, because you are built already your career, your experience on something that you think is the reality, and you are not willing to question the reality. That's why it's easier for someone coming from a different side. I studied economics, my engineering degree, but for example, I didn't have my life or experience or career in economics, so maybe it was also easier for people coming from that area.
You know what, on the yuppie elite article, in fact, I see in the audience my friend who's a sailor who I referenced in that article 4 years ago, but he got Bitcoin quickly. And it's because he wasn't coming from a place of already being indoctrinated with a certain way of of thinking about investments and money. So shout out Max, I see you there.
Great. And also, every time there is a new technology, there is always a group of, let's say, many smart people who don't agree with this or don't see the potential. Like the history of books is full of smart people who were against electricity, were against internet, were against the automobile. For the
Yep.
automobile, were saying there was no fuel station, there is not enough roads, so we'll never scale. For
Yep.
electricity, the same. For internet, the first years, it was to send an email, it takes so long. For there was also this sound, it was interrupting often, and many of also even the smart people were saying, "No, I will never scale." So also we can also say about curiosity. I think this also what I saw discussing with other Bitcoiners. We are all together, like defined together from having curiosity. It's not just what we have been taught, because no one really taught us history of money. Actually, while studying Bitcoin, even if working for an international company with good degrees, I was also kind of embarrassed of how poor was my education on money. But we decided proactively to study and to be curious about the system.
Yeah, to our advantage in my life, I never seen or witnessed anybody loving his bank. So maybe the question is to what extent he trusts the system, and maybe people who distrusted 100% bought in 2012, and then now there are people which are more savvy and they know how bank play the game, and they distrust for that reason, and people are less knowledgeable figure out in the future. But the threat to Bitcoin is not coming from the blind trust people put in the banks, because I think we all know that they are forced to fake to have the trust to get the loan and or something like that. So unless you work for a bank, that's not a competitor to the Bitcoin adoption. It is a competitor. It is the obstacle is the risk, whether or not the risk they can stomach, whether or not the risk takers and how much they study. So our job here is paramount, and your job is of paramount importance.
Yeah, agree with all that.
But do we think, because I think it will shift in this year and maybe next 2 years, actually also seeing a high inflation finally also woke up some people, right? Because so far the inflation was 1.52%. We know that it's wrong. We don't need the inflation to stimulate the economy. But also on the other side, people didn't suffer in the West war, didn't suffer in the last 10, 15 years, till 3 years ago, or high inflation. So it was hard to bring up this concept. But now with 7%, 6% we had, I think it was a good trigger. And also all the macro indicators are leaning towards cutting the interest rate, and they will have to print money, not because they want, but because it's the only way to keep the monetary system working. We have seen already interest on debts is 1 trillion, and with these interest rates at 5%, it will be higher and higher. So maybe the macroeconomic situation will help also the Bitcoin narrative, when people will see again that they will have to print a bunch of money, because they don't want to tax to cut the spending or tax more or declaring default. So they will always opt for printing money.
Completely, and we're seeing deficit spending expand, which is sort of a stealth quantitative easing, which drives greater inflation. And we're starting to see inflation tick back up, contrary to expectations, and all of that is good for Bitcoin. And meanwhile, we've got Wall Street starting to market for Bitcoin on behalf of Bitcoin. Market Bitcoin as an asset as they're selling their ETF vehicles. And I think we're going to see, that's just how we move through the adoption curve. Is the next incremental slice of the adoption curve, we'll see the post-halving bull market plus hear their wealth manager in their ear talking about how Bitcoin is an attractive asset because BlackRock told them to say that. Meanwhile, inflation's ticking back up and deficit spending is continuing to grow because of the interest expense on our national debt. All those things will move the next incremental slice of the adoption curve to adopt Bitcoin as part of their portfolio. And that process will simply continue to play out every 4 years going forward.
To this regard, there was a massive money printing happening after COVID. And if we take an example situation, how it was in the 70s, where the inflation had slowed down and then went back up all the way to the big numbers. Do you expect the same to happen? Is there this risk to happen in a short term? Talking about 4, 5, 6 years from now. And how do you see the Bitcoin adoption being impacted so early in the Bitcoin life cycle?
Yeah, I guess I should say, first of all, I don't really know, and every time I do try to predict what's going to happen in macroeconomics, it does something slightly different. So that said, I do feel like the pattern from the 1970s of multiple waves of inflation was not for no reason. I think that the sort of bullwhip effect of inflation happens, and we're potentially seeing that beginning to play out right now with how interest expense on our national debt is driving greater debt issuance, and that is stimulative and drives inflation. That's that bullwhip effect in action. So we could see an additional peak, or another 2 peaks play out over the next decade in terms of inflation. And that would make sense based on just the sheer level of debt to GDP we're dealing with at this point in time. I think they have to inflate away the debt at some point here. And you can only inflate away the debt if inflation runs hot. And so it could be necessary, really. And if it happens, it's only good for Bitcoin because that will, so to speak, wake up a good number of people, and they will be the next incremental slice of the adoption curve at that point in time, to realize that the dollar ain't shit, and they'd rather hold Bitcoin. And then once you dip your toe in Bitcoin and you start doing your homework, you realize it's a much better asset, and then that flywheel just keeps happening. Ultimately, Bitcoin is a viral phenomenon where once you learn about Bitcoin, you don't tell nobody. You tell as many people as you can, and you eventually orange pill more than one person. And that's a positive viral coefficient. And so Bitcoin makes its way through the world by word of mouth, ultimately, and then people doing their homework to discover that word of mouth is true. And high inflation just accelerates that process.
I see. And how many tricks do they have up on their sleeves, like to avoid treasury bills option to not get filled? I talk with some knowledgeable people, say they could lend money to zero interest rate to banks in order to fill those auctions. But aside of that, if that is possible, how can they offset this threat for the dollar?
Yeah, it's a great question. I don't really know. They seem to have infinite tricks. Like the BTFP was like a very clever way to do what they did in 2008 was print $1 trillion as TARP and bail out the banks directly. And then they learned from that lesson and all the blowback that came with it. And so when the banking crisis happened a year ago, they rolled out the BTFP, which was not a direct bailout, but it was a guarantee to buy assets at par value which is effectively a bailout, but it's just a more sophisticated and obfuscated bailout. And they've recently rolled off the BTFP, but those assets have to be protected somewhere. So, they're finding more and more clever ways to hide QE, money printing, and bailouts, and they've gotten pretty good at that, and they will keep doing that. But what they can't hide is how any of that QE results in the growth of the total money supply, and growth of the total money supply shows up invariably, inevitably, eventually, as inflation. So, so long as they're playing that game, they're going to drive inflation. And meanwhile, Bitcoin is getting increasingly scarce and deflationary as a result. And people will slowly learn that if they shift from fiat money, where their value gets debased, to Bitcoin, their purchasing power will grow if they hold for more than 4 years. So it's inevitable, I think, on that. When you peel it back to just those root mechanics, that's what we're living through.
Yes, absolutely. And the last thing, let me close this topic because we are heading to the end of the space. I think that it's also in 4 years, 5 years from now, is not that much. But if that happens, Bitcoin will show some value as a hedge against inflation to the general public. Maybe not 200%, but it will be more prominent. Because I've asked to myself many times, what's the inflation point when people is going to lose completely trust. And we talk also with Alessandro and other people, and maybe the right answer is that it depends on how much is high the inflation, and how much does that impact in their daily life. You can cheat on people many times, but you cannot ruin their life without them acknowledging them, spotting it beforehand. Or while it is happening. At some point, they won't believe anymore. I hope that it's not going to happen, but with another peak of inflation, definitely the narrative of Bitcoin will get stronger and stronger, and will protect the smartest people. Sorry, Alessandro, go ahead.
Oh, no problem. Great point. Great point. And also, just making the comment, we were discussing about Bitcoin memes, how it summarized in one sentence. So now is a Bitcoin long term. We are going to the moon. I think with just this sentence.
Yeah.
I think we are already at 1.5 hours, so I think we can approach the end. I want to start. Thanks a lot, Jesse, for the interview. It was really great points and great explanation, and I'm sure everyone who is listening is learning more and more from very from very different interest points. Would like to ask you some closing remarks, and if you want, you can also share the forecast on price. People are also interested on price, end of the year and end of the cycle, and the highest of the cycle, end of the year, and which recommendation you have to someone who is in the progress of learning about Bitcoin.
Yeah, great stuff there. I think in terms of cycle prediction, we'll see. It always ends up being different from what people are expecting. I know that last cycle I was expecting 120 or so, and we got 70. So we'll see this cycle. There's a big argument to be made, a strong case to be made that we could go higher this time than expected because of the sort of the switch of headwinds last cycle to now kind of tailwinds this cycle, mostly in QE, switching to QT and now back to QE. We'll see how big the ETF demand is. I think that's going to be the big variable this cycle. We've seen over the last 3 months how is when the price of Bitcoin is increasing, ETF demand increases as well, like in a big way, exhibiting kind of the classic reflexivity of how people engage with Bitcoin and human psychology engages with Bitcoin. And so as the post-halving bull market materializes, we'll see how big those inflows are from the ETFs. And I think that'll dictate whether we go to 200 or like 350, or anywhere in there. So that's kind of roughly what I'm expecting. And at the same time, I would not be surprised to be very wrong. Maybe it's lower or higher than that range, but that's kind of what I'm roughly expecting. Yeah, and yeah, if you're new to Bitcoin right now, lean into it, learn as much as you can, build your conviction, and such that you can take on a large enough position to not regret not buying more. In my view, you probably have 3 months before the post-halving bull market really picks up. So the clock is ticking. And not investment advice, but I think it's a truly asymmetric opportunity, and one that has me. It dwarfs everything else that's out there in terms of the investment potential of this asset in my book.
Yes. Also, if you are new to Bitcoin, please read the pinned post on Jesse's profile, because it's gonna change your life. Trust me. And also. And also, when the advice I also give people to ask me about Bitcoin, say, when you buy Bitcoin, think about you are buying the halving, the magical property behind it. Because if you trust and you study and trust in this property, create finite in scarcity, you are not going to get scared from that 80% drawdown. You can master it. And you know what? Because why? Because there is always another halving. So this is what makes you master and beat the market together with time. Thank you, Jesse, for your work and for having been here tonight. I really appreciate it a lot.
Thanks, guys, for having me.
You're welcome. And not by coincidence, your website is called Once in a Species. It doesn't happen so often in humanity that we have digital scarcity. Actually,
that's right.
It's the first time.
Yeah, so people can check out onceinaSpecies.com. And yeah, if you liked anything I said, follow me on Twitter. I guess that's just a click away if you're listening to Spaces here. And yeah, check out the pinned post on my Twitter profile. It's got all my best pieces of analysis kind of all lined up there for you to explore.
I also think people like you or James Lavish, Greg Foss, Lawrence Leopard will have more and more interest in the Bitcoin world, because the class of 2024, 25, 26, it's very interesting. It's much more into the system, because if you were into the system, if you were really strictly against the system, probably you will be already in Bitcoin. If you wanted to learn mostly about the self-custody, that is also an important part. But those who are into the system, they also like to hear from people who studied and who know microeconomics and who can explain such a hard concept, difficult concept with this wording and style. So I think you will have more and more interest behind you going on in this cycle. Thanks again, Jesse. It was a pleasure. Hopefully, we will meet in one of the conferences in one of the next years or in other X spaces.
Yes. Thank you very much, guys.
Welcome. For people listening, we are having now Larry Leopard next week on Thursday, and we will keep inviting a significant account in the Bitcoin space. Our mission is to provide great education on Bitcoin, especially Bitcoin as a store of value. We had Vijay, we had Thomas Farrer, we had Jeff Booth, we have now Jesse Myers Croesus. So the educational level, it's it's great. So we will keep this high quality in the future. And you can subscribe also to our YouTube channel, where you can see also, you can listen afterwards to all our interview. Thanks all. Thanks, Francesco, for co-hosting, and thanks again, Jesse, to have been with us today.
Thank you, guys.
Thank you, everybody.
Thanks.
Follow the Ghost and the Cost to get notified, and see you very soon. Bye.